Okay, I see you. Listen, it's Tuesday. I'm on the Trading 212 app. It can only mean one thing, Trading 21 Tuesday. In today's video, I'm going to be showing you how to fund your Trading 212 pies. Listen, when you have a pie and it's fully functioning and all's going well and you want to continuously add to those pies, Trading 212 gives you a few different options in how you can fund that pie in order to try and generate a better performance. So I'm going to show you two of the three options that it gives to you in today's video. I'm also going to edit the allocation of one of my funds because I feel like the target allocations that I set previously, I kind of want to tweak to something that I feel is a bit more desirable going forward, and we're just going to keep it moving. So if you want to know all of that plus more, please like, comment, subscribe, help the channel get to 8k subscribers. Follow on Instagram and Twitter at Infinite Investors. And listen, if you're wondering what app I'm using, I mentioned it at the beginning, I'll mention it again. I'm using a Trading 212 app. My link will be down below in the description and the pinned comment. Click on the link, sign up, deposit, and you will get a free share of up to £100. Listen, I just got a free share of, let me check my notifications, Starbucks, which is an $80 share, and in fact I got it at $77. I sold it at $80, so not only did I get a free share, I actually made a little bit of a profit. Oh yeah, and I got a dividend on one of my free shares. Imagine that. So I got a free share from people signing up to Trading 212. I left it for a couple of days. I didn't even check the ex-dividend date, to be honest, and then now Trading 212 gave me a £1.92 dividend for a National Grid free share that I had. So listen, it's well worth it. If you don't have Trading 212 and you want to sign up, now's definitely the time. The market's doing all kinds of things right now, and it's well worth getting into the stock market. But yeah, before I get into funding those two pies and changing the allocation, first of all, let's just give a very quick portfolio update. You can see I'm back in the green now. Thank God, I'm back in the green, and now hopefully we can stay there and we can keep growing. Obviously still modest figures, don't watch that, 0.37%, but we're getting there. This is a new portfolio which I'm just starting with and keeping things moving, and basically, just to kind of put it into perspective, this portfolio is kind of split into two parts. The main part of my portfolio is my pies. You can see the 30 fund 11%, the DPMO fund 10%, and the Kiddies fund 8%. The reason why the percentage is still so low is because of the punt that I took with Lemonade, and I did an individual investment of Lemonade, but then I did another round I think last week just to kind of average it down a little bit. Lemonade originally was a punt. I mentioned this in one of the earlier videos. However, I have been doing some analysis on Lemonade of late, and listen, it's tasting kind of sweet. I feel that Lemonade, I actually felt quite strongly about Lemonade when it was a punt. It was a punt, but it was kind of like an educated punt, so to speak. Now I actually feel genuinely stronger about this business. So I am probably going to have to restructure how I invest in Lemonade, because I feel like this is a business where I should have a meaningful size position and just leave it for the long term. It does feature in one of my pies, the DPMO, so I probably will still keep it there. But I feel like something like Lemonade should probably feature in my ISA. So it's quite probable that because I'm only losing 68 quid, which is kind of a lot to be honest, but because I'm not losing that much, I might just sell this, add it to some new money, and then put it into my free trade ISA, so that whatever gains I get is tax free, baby, because I'm not on paying any form of tax to any form of man, ever. Yeah, let's just move on. Now today I'm going to show you how to fund your pies. As you can see from my portfolio, I've got 12988 in the portfolio and 3543 funds. So we're going to do some funding of the pies. It's actually not my regularly scheduled funding round. That's not until September, to be honest. Can't actually believe we're near September. Today's the 25th, right? Alright, here's a depressing fact. We're 4 months away from Christmas. Imagine how quickly this year's gone. How depressing is that? Anyway, I digress. Let's get straight back into this. So normally my next round would be in September, but I've got some free funds here, primarily from the free shares, to be fair. So I want to get this money hard at work. I want to put this money to work. So I'm going to invest £100 into DPMO and £100 into the Kiddies fund as well. But I'm going to show you some of the different options that you can do, which I think is really cool with this application. So The first one we're going to start with is the DPMO fund. So just a quick reminder, you can see my holdings here. It's doing 10.85% primarily due to NEO. So NEO was a 50% allocation, Cloudflare 20, Virgin Galactic 20, and Lemonade 10. NEO's done exceptionally well, and because obviously it's a larger percentage of this portfolio, it's obviously had a higher weight into the performance. And you can see the other ones are actually pulling it down. Cloudflare's not been doing that great, but it's only 1.13% in the red, so it's not that bad. And you guys know that I got a position in free trade on Cloudflare that I believe in for the long term. So my feeling towards Cloudflare is not shaken in any way. And obviously, what I'm about to do now in this video hopefully should reduce that percentage loss anyway. Virgin Galactic, it's been going down, which I've been really excited about, to be honest, because I want Virgin Galactic to go down hopefully to like around the 10 to 15 mark. If I can see that happen, I actually just tried to tap it, but I realized you can't actually tap it here. You have to go back to the other place. But if that actually happens, then I think again Virgin Galactic might be a stock that I put in a bit of a position in. I'm not talking like 5k like Cloudflare or anything like that, but maybe a couple of grand. Just put it in there, leave it in there, and see what happens, because I think it's a very interesting proposition, and I like the chairman, Chamath Palihapitiya. So because I like him, I like the CEO. I don't really know the CEO, but I'm confident in the CEO's abilities, and obviously it's a no debt business funded by Branson that's trying to do some major things. And we talked about it in last week's video, so I don't need to get into it. It'll be exciting to see. Anyway, you guys wanted to see me fund this portfolio, so this is what we're going to do. You can invest and stroke withdraw funds. Now, you get three options. You can fund by target, self-balance, or do it custom. So funding by targets basically says, listen, let me actually show you what it says. If you want to put £100, because obviously NEO is 50%, it's going to do 50 into NEO, 20 into Virgin Galactic, 10 into Lemonade, 20 into Cloudflare. It's going to add a little bit of the cash that's in my portfolio due to the rebalancing that I did in last week's video. However, I do not want to fund by targets, primarily because NEO is doing so well and Virgin Galactic, Lemonade, and Cloudflare aren't doing so well, that I want to average some of those positions down. So instead, what I'm going to do is a custom funding. So I can choose custom, and Trading 212 gives me the ability to basically then say, you know what, all right, smarty pants, tell us how much you want to put into each. So I still want to make sure that all of my positions are getting funded, whether they're in the green or not. So let's start with NEO, as that is the top one. I want to put 15% into NEO, so that's 15 quid here. The next one, that was Cloudflare, which is only a 1% loss. So I want to put 20 into Cloudflare, so slightly higher. The next one was Space, which was quite a much bigger loss. So with Space, Virgin Galactic, I'm going to put 35, and then Lemonade, which is slightly less of a loss than Space, I'm going to put 30. So that averages out to £100, and that's all done. So I can just tap out of that. I've got £20 going into Cloudflare, £30 into Lemonade, £15 into NEO, and £35 into Virgin Galactic. Confirm buy, and hey presto, that progress bar at the top is showing you that it's going to start investing into these positions, and it's 25%, it's 75% complete, and soon it's going to be 100% complete, and that's all basically going to be done. It's done. It's 100% complete. The value of the supply is 324, and you can see that's basically done. So if we go back to the holdings, what you'll be able to see is the Cloudflare one has dropped slightly, the Virgin Galactic one has dropped as well, and the Lemonade percentage has dropped as well. Obviously, the overall value of this portfolio has gone down because I still added money to NEO, and NEO was, you know, I think 45% in profit or whatever it was. I can't remember the exact figure, apologies. So the overall value has gone down. Had I not put any money into NEO, then obviously the overall value of the portfolio would have gone up from a percentage standpoint, but I intentionally didn't want to do that. I don't want to get into a position where I'm treating these as individual stocks and then I'm only putting money into, say, one stock because that's so far down, and then I'm leaving the other stocks forever, which is what I do on my free trade portfolio. So because I want to kind of still look at this as a fund and still distribute money across all of these and not get into the habit of treating them as individual stocks, then I am going to take that hit. But hopefully, you know, with the peaks and troughs of the market, that's going to average itself across and, be okay for the long term, which is the whole purpose of this portfolio, it's a dollar cost average into it. So yeah, that's the DPMO fund effectively done. Now, next I want to edit the Kiddies fund. So when I set the Kiddies fund holdings, I put 25% into Visa, 25% into Walmart, 20% to Microsoft, 20% to Target, and 10% into Apple. Apple's had a really good performance of late recently, and soon their stock split is coming up, and I think it will continue to grow post that period as well, once that stock split has been done. I also think that because I hold PayPal, and I know a lot of you guys hold Square, I'm thinking that I might be overexposed into Visa. I do think Visa's going to be here in the 10-year time frame or the 18-year time frame, which is the reason why I've got this fund. And I do think Walmart's going to be here in an 18-year time frame as well. But I think that I've kind of undersold Apple a little bit. So the first thing I really want to do is actually reduce the 25% Visa and the 25% Walmart and make it all 20% each by adding that to Apple. So simply put, I go here, I'm going to use a slider here, drag that down to 20%. You can see that currently I'm only 90% allocated, so I either need to add a stock, which I can do there, or I need to just increase one of the other ones. So what you can see, I'm down to 18.92, but in fact, you know what I'm going to do? Let me go back. Let's backtrack. Currently, you can see when I edit the pie, I'm 20.78% average annual return based on the 5 years. So let's see if I change this, if it actually beats that. So we're going to bring that down to 20, and then we're going to raise Apple to 20, and it does beat it, 21.33. So actually making this change does mean something's wrong. Apple's a bit too high. Wait there, there you go, 21.11. So listen, by making that slight adjustment to the portfolio and changing the targets, it's actually changed what the future projection is going to be as well for the performance. So hopefully that does make, that 1% a difference a year, compounded, could actually make quite a big difference to my kids. Do you know what I mean? So hopefully they'll thank me for it, or maybe they won't and they'll just resent me and just try to put a life insurance policy on me and just off me in 18 years time. Who knows what kind of kids I'm going to have. Listen, we pray to God that they're just going to be blessed individuals. Anyway, irrespective, I'm going to make it 20. I'm going to save that, and boom, that's all done. So now if we go back to overview, I want to invest into this pie as well, and I'm going to do it by target. So I don't need to self balance, which we kind of went through balancing last week when I rebalanced the portfolio. Here, what that basically means is if I go 100, self-balancing is basically going to put more money into the underweight ones and less money into the overweight ones. So we kind of just did that via the rebalancing method, but it wasn't a funding mechanism. It was just kind of selling positions and buying new positions. Here, instead, all I'm going to do is just fund it by targets, and away we go. So quite simply, £20 in each, 20%, very easy, very simple, confirmed by progress bar at the top, 0%, and let's see that one there grow. So soon that is going to be there, and 60% already, 80%, and soon we're going to have it as 100%. It's 100% done. The value of the pie is £316.87, and you can see the percentage has dropped. Obviously, when you are averaging a position that is in profit, you are naturally going to average up effectively, which means you're buying more expensive shares technically, but this is the whole point of an average process. You're not trying to buy at the perfect price and then just see your gains be X amount from the price you did at. You're trying to consistently buy into these businesses, and so that over the long term you will be growing at a nice compounded rate, ideally at the rate that you can basically see here, which here if I edit is 21.11%. In fact, I don't think I even need to go there. I think I'll just go here, and 49.39% for the DPMO, and for the 30 fund it's expected to be somewhere in the region of 58.65%. Like I've always said, even if I get 25% of the way to these targets, then I'll still be a very, very happy man. And that's basically all done. So listen, the pies is done. I funded DPMO, I funded Kiddies, and that's it. Hopefully you found this video useful. If you did, like, comment, subscribe. Please follow the Insta, please follow the Twitter. I'm posting all kinds of stock pick and other information that hopefully you guys will find not only interesting, but it will help you on your investment journey to not only find stocks, but to get the strategy and the insight and the tools and the tips you guys need to be good investors. So yeah, hopefully you find this information useful. If you did, like, comment, subscribe, share the video, and I will catch you next time with another Trading 2-1 Tuesday next week, obviously. Take care. Peace.